I have a $5 million net worth at 34 years old, and what you need to understand is that investing is not for the rich. It's quite literally how you get rich. And in this video, I want to show you step by step what to do with that $500 so that it can grow. If you've ever wanted to learn how to build passive income or work towards financial freedom so that you don't have to go to your 9-to-5 anymore, this video is for you. And I promise you, it is so much more simple than you think. Okay, so the very first thing that you're going to need to do is open up an account with a low or no fee brokerage. Now, I know that sounds complicated, but all that is a company that gives you access to the stock market and doesn't charge you an arm and a leg to do it. I'm in Canada and I use a company called Wealthsimple. And I like them because, as the name implies, they're really simple. In the US, you do not have access to Wealthsimple, so I would do something like Vanguard or Fidelity. When you go to sign up, you're going to have to enter in information that is similar to what you would do when you open up a bank account. Then you're going to choose the actual account that you want to do the investing with. And the difference between the accounts is going to be simply how taxes are treated on the money you deposit and how taxes are treated on the money that you make. There are some great calculators online that will help you figure out which one is the best account for you. Because remember, one of your biggest expenses in life is going to be taxes, so good investors minimize those when and where possible. A good starting point or rule of thumb is that if you are making under $70,000 a year, something like a Roth IRA in the US or a TFSA in Canada could be a better bet for you. This is because all of the money that you grow within those accounts is 100% tax-free. If you're making over $70,000 a year, that's where something like a traditional IRA in the USA or an RRSP in Canada could start to make more sense. This is because you're at a higher marginal tax rate, so every dollar you contribute to those accounts, you get a tax deduction for. The key here is that if you want to use one of those accounts that gives you a tax deduction, you have to understand that the money you withdraw from those accounts eventually will have taxes applied to it. And this is why it's so important to make sure that you're reinvesting any tax savings you get from contributing to a traditional IRA or RRSP to compound that growth and make up for the fact that you'll have to pay taxes later. Once you have your account set up, you're going to want to move money into it. And you'll do this by linking your new investing account to your bank account. Then you will add money. Just because the money's in the account doesn't mean that it's growing. Remember, it's not the account that grows your money, it's the investments you buy with the money inside the account. What's next? We choose our investments. I take a diversified approach to my investing because I don't want to be overexposed to one company, one country, or one industry. And we do not stock pick. Instead of looking for the needle in the haystack, we buy the entire haystack. To buy the investment, you would search for the ticker symbol or short form name of the investment in the search bar. We can see that one share of VT, which is Vanguard's total international equity fund, is $118.86 a share. This is one of my favorite investments in the US because it gives you exposure to the total US market and the international market as well. Now, this is not a recommendation to buy the specific investment, just a starting place for your research. Once you've identified what you want to buy, then you're going to come over here to actually buy it. I always set my orders to market buy, which just means buying at the price that it is right now. And then you can decide to buy in shares or in dollars. Personally, I always choose dollars. So I have $196 sitting in cash in my TFSA. That means that's money I have available to invest if I wanted to buy this fund. So you would put in the dollar amount that you want to buy, and that would tell you your estimated shares. Then you click next and you're done. Now, obviously, buying the investment is only one part of understanding how to invest. It's really important that you understand market cycles and market psychology so you don't put yourself in a situation where you lose money. I teach you all about this in our free investing masterclass, but I've also put together a free 90-minute how to get rich in a recession masterclass, where I'll teach you how to safeguard your income, how to spot opportunities, and how to get rich with investing. Grab your spot on my website under freebies.